Alright guys, welcome to this new video. In this video I wanted to talk about a setup I recently noticed on the lower time frames in the dollar swishy. I didn't take it, but this is the exact same setup I take on the hourly time frame. So I basically wanted to illustrate why I would take these setups, why they have an edge, and why, how this ties in with the way I trade, applying the Wyckoff method. So first of all, this green line is based on the statistics I have on this pattern. There was a 57% chance of hitting that upper green line before hitting my stop, and my stop loss I will be putting it in shortly, but I first wanted to talk about this entire range. So basically this range, this is a reaccumulation range. On this particular day the pattern happened, but what was most interesting to me and what was really telling that this was reaccumulation is this. First of all, a strong move to the downside, which is a selling climax. Afterwards, we get a strong move to the upside, which is your AR, your automatic reaction. Then you get a secondary test in the range. Then you get another test in your phase B. So you really have this range forming. And as you know, there will be liquidity at both sides of the range. And what's always key when ranges develop is to look what happens once the liquidity gets triggered. And this was the first change of, this was the first change of character. As you can see, a strong move to the upside once a swing low was created. And this was the second, because look at the violence of the move after the low gets broken of the selling climax. It's a small break of the downside, but it's enough to trigger liquidity. And as you can see, once the liquidity gets triggered, there is this strong move to the upside. To me, this confirms that this is reaccumulation. That's my first confirmation. The second one is that after this move to the upside, we get some pause at the upper side of the range, which is also very telling, and then you get this explosive breakout, which to me is a sign that this is indeed reaccumulation, and I always look to enter here. However, after some backtesting I've done, I noticed I'm better off when I split my position. So normally I would enter at the close above the range, which would be here. However, I also noticed that I can enter over here and get a better payout overall without missing too many trades. So in this instance, if I only entered here at the retest of the range, you can see I missed the trade. However, if I put my stop loss in, so the entry would be here, stop loss would be below here, you can see the target is at around 2.4 R. Fuck. Like that. So that's quite a decent edge. There's a 57% chance of making 2.4 R. Unfortunately, no fill, as you can see, but this is a very clear setup. So the statistics are in my favor. There's a very clear reaccumulation pattern, a very range forming. Look at how many touches this level gets. It's a very clear level. You get one over here. This one is a bit, it spiked through. This is a touch. We have another one at the AR, another one, another one, and then this zone. And then, as everyone knows, you get the support becomes resistance, and that's the part where I now scale in one part of my position. So I always look for, in a bullish scenario, a range forming, break to the downside, change of character, last high, just like here, the last high, the last point of resistance before the breakout, where that's where my limit order goes. Then I also enter at the breakout. So one entry is over here and one is at the retrace. And then I target my statistical target just like I did over here, which is based on a mechanical edge I have on the higher time frames, which I won't be giving away because it took me a lot of time to test. But this is always how I trade. So yeah, this is also something you can do for yourself. I know a lot of people are getting into Wyckoff trading. This was a clear reaccumulation range, and this is how I play these ranges. I know a lot of people that maybe enter at the spring over here. To me, it's too risky because you don't have the second change of character. So this white line to me is the second change of character, and I want to see it because otherwise, let me clean up the chart first so I can explain it a bit better. So I always wait for the second change of character because otherwise you're basically buying resistance if you buy just after the spring. And yes, your risk reward is a lot better, but the odds of you of the trade winning are also very much lower. So that's really something to keep in mind. It's also about what fits with your personality. Do you want a higher strike rate? Do you want a lower strike rate? Do you want a better risk to reward or a lower risk to reward? Personally, I think a higher risk reward is better for most people because let's say your win rate is only 20%, but your risk reward ratio is 5. What if you miss that winning trade and you have a lot of losers? You will really psychologically feel very bad about your trading and will make more and more mistakes. So it's often better, especially for beginners, to trade a strategy with a 50% win rate or even higher, because then if you miss a trade, the impact isn't that big on your equity curve and on your emotional capital. And especially emotional capital is important in the beginning phases. So that's something you want to figure out for yourselves, and based on that you are going to either enter at the breakout, enter at the retest area, or maybe enter at the spring, which I sometimes do, but as I said, it's all based on what you can handle emotionally and yeah, what your edge can handle. So this was another accumulation pattern. That's why I also had this bullish bias, because we have been going up. The dollar has also been putting in a accumulation range. So this was the first bullish bias, a clear accumulation. This was the reaccumulation phase. And then we had this second reaccumulation phase. So very bullish price action. And that's why I wanted to enter this trade. Because if we look at the DXY, we had very bullish price action. Look at this. All the lows have been taken out. So this was a, this was an accumulation range. Then we got the move to the upside and we had multiple lows forming. So one over here that didn't get broken, another one over here. And as you can see on this particular day, all these lows got broken. We retested the accumulation range, and then we got this very strong pin bar which is very, very bullish. And I also made a post about it in my Telegram channel that after that liquidity had been taken, I expected the dollar to move first of all to this point, and the second point will be this point, which is what's happening right now. Because often when one side of a range gets broken and rejected, the price goes to the other side of the range, because that's where the liquidity is. And liquidity kind of works like a magnet. So you want to really look for these places where there are multiple lows that haven't been broken. Then once it gets broken, if you see a strong rejection like this, you really want to get in and target the other side of the range. What was also very, let me remove that circle. What was also very nice about this setup is that this was a accumulation range, and this was a clear spring. So this was the accumulation range, multiple lows on the hourly that didn't get broken. Strong move below the range, and then strong move above, which is the spring, also in confluence with all these daily lows. So to me, perfect setup, and that's why I had this bullish bias on the dollar, and that's why I took the dollar swishy, or well, at least I didn't take it because I couldn't get a fill and it was on the lower time frames, but that's why my bias was also long on that pair. So I hope you guys learned a lot from this video, and I'll speak to you guys next time.